Hi, I'm Bobo. In today's recap, after Finance Chief Paul Chan-mo-po said the government was considering easing mortgage rules, the Hong Kong Monetary Authority finally announced the details of the new rules last Friday. Buyers can now take out 70% mortgage loans for homes up to 15 million Hong Kong dollars for the first time since 2009, when counter-cyclical measures were adopted. If you're buying a home in Hong Kong, here's what you should look out for. Let's say we have a repayment period of 30 years and an interest rate of 3.5%. Before the change in rules, you could borrow loans worth up to 50% of the property price, and you also had to pay 7.5 million Hong Kong dollars in down payment. In the new mortgage rules, the down payment was significantly reduced by 3 million Hong Kong dollars to 4.5 million Hong Kong dollars. But there are two catches. The monthly repayment has now increased by 40% to 47,150 Hong Kong dollars, and the monthly income requirement has now jumped to 94,300 Hong Kong dollars. On the same day, the Hong Kong Mortgage Corporation announced that with the mortgage insurance program, buyers can now get up to 80% in loan-to-value ratio for flats below 15 million Hong Kong dollars. With a down payment of 3 million Hong Kong dollars, you can now buy a $15 million flat. However, the monthly repayment goes up to $53,886, and you'll need a minimum monthly income of $113,558 to pass the stress test. From these details, buyers should not only consider their repayment ability, but also observe interest rates and property market trends before buying a new home. It's expected that the US Federal Reserve will raise interest rates twice this year. If banks in Hong Kong follow suit, interest rates are predicted to rise by 0.25% this year. On top of this, though property prices in the first quarter of this year rebounded by 7% due to the reopening of Hong Kong borders, that rise has stopped since the second quarter. As of June this year, property prices have dropped by more than 10% from its peak in 2021. So the government's relaxation of mortgage rules was essentially designed to revive home prices. Regarding land sales, only one piece of government land has been sold so far in this fiscal year, and it was sold at a low price. Tenders were opened last week, and located at Sinding Street in Kennedy Town, Wheelock won the site for 1.72 billion Hong Kong dollars at $7,070 per square foot, which is 25% lower than last year's site in the same area. Looking at property tax revenue generated from home transactions in the first half of this year, only 31,124 first and second-hand transactions were recorded in the first half of this year. Although more than the same period last year, there's still a long way to go from 2021, when home prices sank ever so slightly. With shrinking turnover in the property market, the tax revenue generated from property transactions will also decrease. The easing of mortgage rules will also increase purchasing power, which will likely boost government revenue. However, Finance Chief Chan said that the policy's objective is to reduce the down payment of first-time homebuyers and those hoping to trade up, not to lower stress test requirements or serve as a prelude to relaxing cooling measures. Having said that, not just homebuyers are benefiting, but also developers, particularly those focusing on medium to high-priced homes. Developed by Kerry, Sinoland, and Swire Properties, La Montaña in Wong Chuk Hang Station announced its first price list, offering 88 units last week at $27,989 per square foot. Among them are 36 units with construction prices below $15 million, which will no doubt benefit from the new mortgage rules. The project collected 1,100 checks, making it 11 times oversubscribed. As for High Park in Hung Shui Kyu, developed by Asia Standard International, the cheapest unit in the first batch out of 125 units is only about $4.4 million, while the most expensive flat is $7.05 million. This is actually quite affordable for a property considered medium to high priced. The project collected 1,300 checks, marking an oversubscription of more than 9 times. Looking at the overall first-hand market, no major new projects went on sale. As a result, there was no increase in transaction volume over the past weekend due to the new measures. Over the weekend, only 16 transactions were recorded, marking a week-on-week drop of more than 90%. Transactions came mainly from new projects, largely from Henderson Land's Henley Park development in Kai Tak, which sold 7 units, generating nearly $56.22 million in sales. 4 transactions were also recorded on Sunday, all involving one-bedroom units, measuring 384 square feet in size. Prices for these units ranged from $7.67 million to $8.26 million. Looking ahead to this week, expect the release of sales arrangements by La Montaña and High Park, as well as the sales brochure of CK Assets The Coastline in Yao Tong, a new project to join the fray. The project is divided into 2 phases involving 228 units and 658 units respectively. It will mainly focus on small and medium-sized units, while open-plan to 2-bedroom layouts account for 75% of the flats. The developer said they would launch the second phase first in October 2025, with an off-plan period of more than 2 years. Turning to the second-hand market, property agents are saying that despite the relaxation of mortgage rules, interest rate hikes are still keeping buyers from entering the market, as second-hand trading volume hasn't seen much improvement. Looking at weekend transactions, Hong Kong's 4 biggest real estate agencies recorded 5 to 9 transactions for the city's top 10 blue-chip housing estates, all seeing a week-on-week increase, but only in the single digits. Many estates came away with no transactions. Among the housing estates that did record sales, City 1 Sha Tin recorded the most transactions with 3 homes sold. However, the owners in 2 of those cases recorded profit losses. In one transaction, on the middle floor of Block 40, a 2-bedroom flat measuring 304 square feet sold for 4.83 million Hong Kong dollars at $15,888 per square foot. The original owner bought it in 2019 for $5.4 million. Holding the property for 4 years, they lost about $570,000 or 10% in profits. In another estate, another buyer took advantage of the relaxed mortgage rules and purchased a property that cost over $10 million. This was a middle floor flat in Block 15 with 3 bedrooms and a saleable area of 853 square feet. It sold for $10.8 million at $12,661 per square foot. Based on the new mortgage rules, the loan-to-value ratio has now increased from 50% to 70%, with a down payment of at least $3.24 million. The original owner bought the flat in 2017 for $9.9 million, booking a profit of $900,000 and nearly 10% in appreciation. Next, Metro Harbourview at Tai Kok Tsui recorded 2 transactions, both at a loss. In one case, an owner lost more than 1 million Hong Kong dollars selling their 3-bedroom apartment. This was a lower floor unit in Block 1 with a saleable area of 532 square feet. It sold for 8.48 million Hong Kong dollars at $15,939 per square foot. The original owner bought it in 2018 for $9.8 million, thus losing $1.32 million or 13% in profits. That's all for this episode. See you in the next.